SpaceX has already given back its IPO gains, and people are acting surprised. They shouldn't be. An IPO is where a great company, an exciting story, and a terrible entry price can all exist at the same time. Don't confuse the business with the trade. The pattern is almost embarrassingly predictable. A famous company goes public, demand overwhelms supply, the headlines explode. Retail investors rush in because they are afraid of missing the next Tesla. The stock surges, creating a wave of FOMO as retail investors rush into the trade. Then the early excitement fades, price returns toward the IPO level, and the market finally begins the boring work of discovering fair value. SpaceX rallied roughly 50% from its launch price before reversing sharply. That is not unusual. That is the IPO cycle. The obvious comparison is Tesla. Both companies are tied to Elon Musk. Both entered the public market during a June and a midterm election year. Tesla initially surged after its IPO, then lost roughly half its value from the peak. But here is what people conveniently forget. Tesla did not immediately become Tesla. After its first IPO rally, the stock spent years moving through doubt, volatility, and weak conviction before the market fully understood the business. Looking backward, the early price looks obvious. Living through it was anything but obvious. But SpaceX is not Tesla in 2010. Its starting valuation is much larger. It takes far more capital to move the stock. And today's broader market structure is different. That matters because every stock carries two kinds of risk. Company risk, execution, profitability, competition, and valuation. And market risk, liquidity, interest rates, economic weakness, and the direction of the S&P 500. Tesla's early low formed alongside a broader market correction. SpaceX may still need that same moment of market-wide fear before a durable bottom can form. So what should investors watch now? First, does SpaceX stabilize around or below the IPO price? Second, what happens during the next rebound? A strong recovery could suggest that buyers are building conviction. A weak rebound followed by a lower high would signal that the market is not finished repricing the stock. And third, watch the S&P 500. If the broader market enters a deeper correction later in the year, SpaceX could face another leg lower, even if the long-term business thesis remains intact. I would not bet against Elon Musk over 20 years, but I would never confuse long-term disruption with short-term price support. Apple fell after its IPO. Tesla fell after its IPO. Great companies can spend months, sometimes years, trading below the price that excited investors first paid. The opportunity is rarely found in the opening day celebration. It is usually found later when the headlines disappear, the tourists leave, and patient capital starts accumulating. SpaceX may transform aerospace, communications, and global infrastructure, but even the future has a price. Don't chase the launch, track the flow.